This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Welcome back, value investors. So I have good news this week. This rally is not just contained to the expensive growth stocks, the ones we can't get in, the Magnificent Seven and those kinds. If you're invested in certain areas of value, there's a lot that's rallying here in 2023, and many are trading near the 52-week highs. Who knew? But we did, because some of you I know probably own some of these stocks. I own some of them in my value investor portfolio here at Zacks. And we've talked about many of them over the last, year, 2 years maybe. So if you dove in when they were super dirt cheap, they're still cheap, but they have rallied this year. So we too can get in on some of this red hot bull rally that's happening. So where can you find these hottest value stocks? Like, what industries are they in? They're in the home builders again. Remember, they all have very good Zacks ranks again because the earnings are on the rise again. So, and they remain cheap in some cases with a single digit PE. So the home builders, the auto retailers, not just the manufacturers, but the retailers. We've talked about them over many years because they've been cheap over many years, but those are staging big rallies. The construction and infrastructure stocks, those are surging and remain cheap. It's hard to buy them off of this big rally, I know. Take a look at some of those charts, but they're still cheap. And then some transports are kind of sneaking in there. And I expect more of them to sneak in during earnings season as those earnings estimates are revised higher and they get better Zacks ranks. But those are some interesting industries to find these red hot value stocks. It's not really areas that most people are thinking about right now because they are kind of obsessed with the Magnificent Seven and the tech stocks. But these two have been red hot. So, of course, I had to do a screen to find a group of these red hot stocks. So I did look for Zacks number 1s and 2s. So those are the buys and the strong buys. And that should mean the earnings estimates are on the rise. That's a good thing. That's what we want. I looked for them trading within 5% of their 52-week highs. I also looked for PEs under 15 and a price to sale ratio under 1. And remember, price to sales ratio is under 1. That's a value because if it's like 0.7, that means we're paying 70 cents for every dollar of sales. So we are getting it on sale if it's really worth $1, but we're only paying 70 cents. So that's a good thing too. I thought this would be kind of a narrow thing because I wasn't sure how many of these with that Zacks rank were actually at or near the 52-week highs, but it gave me 41 stocks. So that's quite a nice group. So it might not be hundreds of stocks that have these ranks that are cheap near their highs, but 41 isn't too bad either. So I picked out 5 just to give you kind of an idea about what's in here and what's going on. They are in the similar groups and the industries I just mentioned. So there aren't really going to be any surprises. Most of these we've talked about before, but that's okay because they're still cheap and, they still have these good fundamentals. So let's dive right in. The first one is Asbury Automotive, ticker ABG as in George. A as in Adam, B as in boy, G as in George. We've talked about a lot of the auto retailers over the years. This is one of the largest in North America. They also have online car buying called ClickLane. They all have that now. So you can either buy online or you can go to the lot. And despite the slowdown in used car sales and even the price increases in new cars, they are still like crushing it, all these auto guys. They also have the repairs, so that's getting popular too. So year to date, these shares are up 39%. They are at 5-year highs, and the 5 years is up 259% versus the S&P up 62%. So they have been crushing it for a while. PE is still just 7.8. Price to sales is 0.35. There's number 2, which is the buy, and they're reporting on July 25th before the market opens. So that's coming soon. I'm recording this on July 19th. So in just about a week, we're going to get a earnings report on Asbury, plus a bunch of the other ones. A few other retailers were also on the list of 41 stocks in the screen. So pick the one you like the most if you're interested in the retailers. I do like the retailers, but I'm kind of wishing they would have at least a little bit of a cool off. But right now they're not. They're red hot. That's Asbury Automotive, ABG. Then, of course, we have to have a home builder on here. There were several, but I went with Beazer this time. Beazer Homes, ticker B as in boy, Z as in zoo, H as in Harry, BZH. And they also have not reported yet, reporting on July 27th after the market closes. They're a number 1 rank. Year to date, get ready for this. Year to date, shares are up 131.2%. They are at a new 5-year high as well, but the 5-year high is just up only 94.7%. But this is impressive. Nobody thought the home builders would be doing what they're doing this year because it was supposed to be a terrible housing market. We're supposed to be in a recession. Nobody's buying anything with mortgage rates at 7%, but that's wrong. We're all still buying new homes. So Beazer still cheap, even with the year-to-date gains. PE of 7.2, price to sales of 0.4. And as I said, it's a Zacks number 1, strong buy. And again, reporting next week. So we'll see. We're getting a whole bunch of home builders here early in the earnings season, and I'm expecting good reports again. So that's Beazer Homes, BZH. Third stock is a transport, Delta Airlines, ticker DAL. They've already reported earnings. They went the first week of earnings, and it was better than expected, even though a lot of people already knew that the airlines were, selling out at full capacity, adding routes, especially over to Europe, where they make more money. But year to date, Delta Airlines up 47.1% now. 2 years up 20.7%. And then the 5 years, they're still down 10%. So the pandemic's still impacting the 5-year return. But year to date, it's one of the hottest stocks, trading near 52-week highs. PE is just 7.3, price to sales 0.6. It does pay a dividend yielding 0.8%. And it's a Zacks number 2. So that's Delta Airlines, DAL. Then we're going to switch it over to, on the technology side, yes, there is a tech stock in here, and it's one we've talked about in the past, Arrow Electronics, ticker A as in Adam, R as in Robert, W as in Wendy, ARW. And with some of the technology stocks we've had in the past in our screens that were cheap, they've always been ones that are on like the service side, those that are like in distribution, or in this case, Aero Technology Solutions. So they said that they guide innovation forward with 210,000 technology manufacturers and service providers. In 2022, they had sales of 37 billion. So they're not small. But if you're a company and you're like, oh, we need this whole new system and we need the cloud and, the data centers or whatever it is you're needing, this is who you call Arrow Electronics, and they'll set you up. So these types of companies don't get all the glory, right? They're just not in the news. They're not doing AI, right? But Arrow Electronics year to date up 37.2%, near its 52-week high. 2 years, it's up 30.6. Does not pay a dividend, and it's reporting earnings in early August. There's no date yet on it, but should be around early August. And it's still cheap, even with the gains in the shares. PE of 8.9 and price to sales of just 0.2. So these are kind of the silent, quiet companies that remain cheap. and yet coming back in favor a little bit here in 2023. It's a Zacks number 2 buy. So that's Arrow Electronics, ticker ARW. And then we're going to finish up with something on the entertainment side, Dave and Buster's, ticker Play, P as in Paul, L as in Larry, A as in Adam, Y as in yes. So Play is their ticker. Dave and Buster's, struggled during the pandemic, but we do want to be out. We are into entertainment, restaurants, all of that. Year to date, the shares are up 29.8% now. Over the 5-year stack, they're still down 14.2, but having a bit of a rebound here and near 52-week highs here in 2023. Still cheap with a PE of 12.7, price to sales of 0.9, and it's a Zacks number 1 strong buy. Now, for some reason, I did not write down when their earnings are. I'm looking right now up. They just had, I think they're on the fiscal year because I'm showing September 2023 is their next reporting period. So that must be why they got the number 1 rank. The analysts like what they heard. They're raising those estimates. So it's got the coveted number 1 strong buy. So that's Dave and Buster's, ticker PLAY. So I really encourage value investors to take a look at what's going on out there and to not get depressed because the Magnificent Seven might be running away, getting more and more expensive every day, PEs over 30 or higher even. I'm thinking, gosh, I missed it, but I want to stay true to my value fundamentals. I don't want to chase these expensive, more volatile stocks. I want to stay in value stocks and in stocks that people are ignoring, that I can get cheaply and that have good fundamentals. So you can get in those. These are just 5 stocks out of this list of 41. And I own a couple that are like similar to these in the Zacks value investor portfolio as well, that are also breaking out, that remain cheap even after big runs this year. And the fundamentals just look really, really solid. And they're in areas that even as the economy slows down, their business may not. I know that sounds strange, but for instance, construction and infrastructure. Construction side, some of the big equipment manufacturers like United Rentals have said in prior earnings reports that even if the economy goes into a mild recession, their business might not be impacted like it normally would be because of the huge infrastructure bill, the $1 trillion spending plan that was passed and that's working its way into the economy, plus the CHIPS Act, plus all the incentives for the EV battery, manufacturing plants to be built, and these kinds of things that are a catalyst for the construction side. And then you also see construction plus home builders still kind of defying everybody's beliefs, even with the higher mortgage rates. So there are some demographic reasons why the home builders are doing so well, plus just very low housing inventory for sale on the existing market. That's putting a catalyst under the home builders. So there are, various reasons why some of these value areas are looking really good here, and we are still getting them cheap. You don't have to worry about overpaying for any of these because that's the whole point of running the screen. At least in a PE and even a price to sales ratio, they are cheap. So pick your poison, go with the PEG, see what's going on there. Maybe check the price to book, see what's happening there. But you don't have to feel like you're missing out or that you have to dive into an expensive stock just to get into this rally. But on the flip side, a lot of these value stocks have also rallied big too. And I'm with you on some of these. When you look at the chart, you're like, it's a little scary to buy here, even though the stock is still cheap. But you know what they say, momentum begets momentum. That's what my colleagues always say on the growth side. And so they have had the momentum here. But there's always pullbacks. There's always a sell-off. There's always going to be a time where there will be a timeout in the rally, and you might be able to get in a little bit cheaper. So no worries waiting for a pullback on some of these as well. But they are still cheap. So valuation is not your concern with any of these. Let me replay what I talked about again. So in case you missed any of those stocks, we had Asbury Automotive. It's still trading at 7.8 times, ticker ABG. Beazer Homes, still going to report earnings coming up soon. Also single-digit PE, ticker BZH. Delta Airlines, it's had a nice rally off of its earnings and its outlook, still cheap as well. Ticker D as in David, A as in Adam, L as in Larry. DAL. We had Aero Electronics, kind of the secret technology company. Nobody talks about them. $37 billion in revenue last year, and you've never even heard of them. Ticker A as in Adam, R as in Robert, W, ARW. And then we had Dave & Buster's. All of us have heard of them, right? Ticker PLAY. That's easy. Just play PLAY. And as always, I keep looking for all the value stocks out there and what's going on in the value sector. I'm reading a really good book on value right now, but I want to finish it before talking about it and sharing some insights from it on the show. So that'll be coming up over the summer as I continue to quickly devour that book. So be sure to subscribe. Don't miss a single episode. You can get us everywhere you can get podcasts, Apple Podcasts, Spotify. You can get us on YouTube on our YouTube page. Just search for Zacks Podcast and you find all of our podcasts there. You can get us on Zacks.com. Remember, it's ZACKS.com. You see the little podcasting link up at the top. Just click on that. You'll get all our podcasts there. But be sure to get us somewhere, and I'll be back again next week with some juicy value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.